Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Thursday, the 3rd of February. I almost said March, 3rd of February, 2022, about 7:10 p.m. Central Time. What a crazy day in the stock market, huh? Facebook down about 27%. It carried much of the market lower. After the close, Amazon comes out. Stellar numbers. Rivian really kicking in there, and their web services kicking in, and you can see the markets are all reacting, up 257 back in the NASDAQ. So while Facebook is down, the rest of the market isn't, and it's that whipsawing at key moving averages that is going on. You know, I have a philosophy also about what do you do in going into key reports, such as central bank reports. It was a given today that the European Central Bank would not do anything in raising interest rates. I still said to traders, I don't think you belong in it. You never know what's going to be said in these press conferences. With that, Miss Lagarde, normally she's very good at these, I think she opened the door. And all of a sudden, you went up 130 points in the euro because she opened the door on interest rates. In the British pound, while they voted and did what the market expected, a quarter-point cut, the vote, there were 9 votes. 4 of them wanted a 50 basis point cut. So you can see what's going on there. Energy is still very strong. The market did not get rattled by the big break in the stock market today. In fact, it's looking at losing more oil out of South Africa. That's very important, okay? Nigeria, parts like that. And here we are getting a little bit of a pickup going into the weekend. What's that weekend weather going to look like in South America? That's what you're dealing with. Okay. In gold, how have I been telling you that the whipsaw is all occurring against this 18-day average of closes on a weekly close-only chart? For the week, you're up 1%. You're sitting here basically right on the 18-week average of 1803.70. I mean, not much going on there that you can hang your hat on. When we come to the April gold, the daily bar chart, I've also made these all bigger. This is how they're going to look going forward. Much easier to see. Took me a little while to get the programming done to make them even bigger for the TV, and I've done it for you. So you can see what that's looking like. I'll tell you, if this market can clear 1809.70, it suddenly gets interesting. Let me show you something that happened. We have a market here that all of a sudden gets an outside day to the upside. If you take out the low of an outside day, you often go to the closest moving average or a Bollinger Band, the closest of the two numbers. We'll get to those in a minute. The market comes back today. In order to prove me wrong, you'd have to get up and over this high. If you get over this high of 1812, it's the highest high we've now had. That means this is a trap. That play didn't work, and you often get a springboard to the upside. So it's something that I'm watching as a chartist and little tools that I have. On the way down, when you looked at the stock market rally recently, on the break, we went into the 18, the 200, the 100-day average. Where's the support? Well, the market starts finding it here. If it does, then the resistance starts at the 200 and then back to the 18. That is just typical as to what these markets will do. When you throw on the Bollinger Band, you get to see that the real support came in at the Bollinger Band along with the 100. So you went from a Bollinger Band high to a low, and now you're churning against these numbers. I'll stick with what I said. If you can clear the 1812 area, then the next resistance, 1820. You close over 1820, and I think you're going to give the bulls a reason to say, okay, I'm friendly again. For me, that's a bit rich. Why? If you buy it over 1820 and you put a stop under this current low, you have a $32 risk. That's $3,000 on a futures contract. Forget that. Doesn't mean you don't look at these things. Is there a trend right here? There isn't. The market is trendless. Momentum going flat. Gold-silver ratio, silver's still losing overall to gold. You keep trying to climb higher and higher here. Silver's been in a downtrend. It's oversold. To negate the downtrend, you got to get back over the 2306 area. And even if you do, you got a lot of resistance waiting for you right here. The path of least resistance is down, but it's oversold. And the target could be in that 2175 area, 2174 and a half. Copper market has been going sideways for the longest period of time. It's as though it was saying to us, hey, the Olympics are coming. We've got the Golden Week holiday. Nothing's going to go on for a little bit. We see what's going on in China. I did a special report. I have my full research. You'll see at the end of this. If you haven't seen my full research, I'll pick targets every day and write a short report on it, along with my general quick comments on the market. Today I was talking about freight rates. And I was talking about bulk and freight. In other words, container ships versus taking minerals, coal and that in different ships. If you saw what happened in the freight rates, you understand what's going on since China has decided to clean up its air at its steel mills. It's just gone into a complete crash. We're still about 3-4 times what we should be the rate in freight, regular freight, but that too is on its way down. So interesting times. I showed the charts and we're right up to date. If you want to get on my report at the end of the day, you might want to stay around and look at that. Should this market get over 450.90, you'd switch the gears to higher low, higher high, and target the 460.70 upper Bollinger Band. If the market closes under the 18-day average of 445.87, you're back into the downtrend looking for 436.90. So that's how I'm reading the chart. In the platinum, you've gone sideways in the market. You have a market that is now still overbought. Any readings over 70 I consider overbought. Embedded is different than that. So in order to resolve it, you either start embedding, which it's not trying to do, or you get a break in the market and you get both numbers away from the 70 level. I have the trend down, the bias up, and overbought. In the palladium market, you're flirting with trying to lose the embedded reading. The market is now sidestepped and gotten underneath the 200-day average. If it lets go here, the odds favor it'll get back to the 18-day average. If it's going to survive, it's got to get up and run right here. It's got an 80.63 reading. They're still embedded, but I think that the longs are gradually peeling out. I didn't say they'll give up their whole position until they see that number start staying under 79. Under 79 on a close, no, I think you're going back down to 2158. Hold here. You got to get back over right here to go up. Now, there's something interesting in palladium. If you're reading, and I invite you to read tonight, they're talking about new and used car prices all through Bloomberg and some of the other publications that I read. They're saying that they've seen the peak. That's what they're seeing on trends in used cars. And new car prices, those premiums that are been added onto them, they're starting to slip back as more cars are available. Well, if you're making more new cars available, you're going to be using palladium because not everything's an EV. And in America, we really don't do diesel. You know that. Most manufacturers won't even make them in America anymore. So that's what you got to keep your eye on. This is sort of a canary in the mine on how the auto industry is doing. That's how I'm viewing it. When I look at the dollar index, wow. If you were to tell me you were going to come back in 5-6 days from 97.44 down 220 points, I'd go, you're out of your mind. That's a major move. You normally don't see anything like that. The dollar is suddenly completely out of favor. I mean, this market got its butt kicked, to put it mildly. It never did get over embedded. It got to the upper Bollinger Band, exactly what I teach in my course. Not embedded. I think the pros came out right there. And my God, did they look good if they did that. So you heard me talk about what I write. So let me tell you what my day's like. I get up about 4 in the morning. I read like mad. I start getting ready to write reports at 5, and I start making all the headline reports. It takes me about 20, 30 minutes because I've already read everything, and the way that I write is headlines. That's what I want to work with. I want to give you the research in my first morning video where it's what reports are coming out during the day, what's the market looking for in them, and did any event happen in Asia or Europe that we should be paying close attention to. So you're going to get that world news. It's done in headline form with bullets. It's not a lot of reading, but it's right to the point. Then I do the morning futures video. Now I'm opening the charts and I want to be your guy where here's what the pictures are looking like. I want you to buy here, sell there. You don't have to follow me. I'm telling you what I would think is going on, where I'm wrong, where I'm right, profit objectives, how do you stay with a trade if it's going your way, and how do you add on to them. I'll talk about all that in the morning update. I'll cover the daily charts. Every now and then I'll mix in a weekly chart, but on the weekends, it's all weekend chart. And that's where you get to work on everything we're doing. Now, my videos will play on your phone, they'll play on your tablet, your computer. How do you get this? And let me give you a full trial to the whole thing. It's pretty simple. 866-973-2077 or go to the website under free offers. Give it a try on the far left. Sign up for what you want there. We'll be sure to get it to you. It's free. Take care.